Hey everyone, so I decided to make a little computer video for you guys to see and get an idea of how I look at charts. And there's quite a few things to look at, so I'm not going to go everything. And there's so much to learn, and even I am still learning to this date, and it's been years of me doing this. But I'm going to give you a little bit of a breakdown, a little bit of an idea of some of the things that I look for, okay? So first of all, this is TD Advanced Dashboard that I'm using right here. This is a good platform. There are better platforms. TD Thinkorswim is one of the best platforms to my knowledge. I don't use that because that's only US stocks, and you have to get a margin account for that. And I don't like margin accounts because I tend to get a little crazy. So if I go put my money in a margin account, then instead of playing with 1 million, they're going to give me 3 million or more to play with. And it's a little too much risk for me. So I would prefer to not use a margin account. And if the money's there, I probably will take advantage of it and either make a lot more or maybe lose a lot more. So I don't want to take that risk, so I don't. So I use TD Advanced Dashboard. It costs $30 a month to use this platform, but it's free if you do over 30 trades every 90 days, I believe. And if you do that as well, you get some other bonus features for free, such as level 2 data right here. And this tells you, this is on the left, the buy orders. And on the right, this is the sell orders for this particular stock. Sometimes there's hidden orders. There's orders that you can't see. I don't know why. I feel like that should be illegal, but sometimes there is. And it's probably because there's multiple exchanges that are routing the orders, but the majority of the time you could see all the orders over here. And this is level 2 data. You pay extra for this as well, but like I said, if you do over the 30 trades per month, you get this level 2 data for free. Okay, now let's look at the chart. Let's look at this stock. I had an alert on this stock at 28 cents. Why did I put it on 28 cents? I should have bought it so far. Because it was resistance over here. This was the last lower high. So I put the signal here and I got an alert. And look, as soon as it passed that resistance, we moved up nicely. Now we hit upwards of 32 cents. We may go a lot more because the next resistance isn't all the way till up here, which is 45 cents. So this particular stock can move. So that's one of the things you look for, is you look for support and resistance areas. And as you can see, support, support, resistance, support, resistance. We broke out of this pattern. As you can see, this was a consolidation kind of sideways pattern. We broke out of this pattern and now we're seeing some follow through. Okay, now let's look at the NASDAQ. This is the QQQ. QQQ is an ETF that tracks the NASDAQ 100. It's the top 100 stocks in the NASDAQ. Okay, what were some of the signs? Because I took a short position on this the other day and I said I was expecting some downside in the market. Why did I think that? Okay, well, let's look back, and now we're on the hourly time frame. Okay, you can adjust. So let me just break this down first, is that you can adjust for 5 seconds, minute, 5 minutes, 10, 15, 30, hour, daily. Basically what this means is if I set it to day, it means each candlestick represents 1 day. If I set it to hour, it means each candlestick represents 1 hour. Okay, and how do you look at a candlestick? Well, let's look at the daily. We're going to look at this candlestick right here. The body of the candlestick. Now, when it's green, the candlestick, that means that it opened at the bottom of the body of the candlestick. So this is where the day started, right here. And it's currently at the top of the body of the candlestick. This is where we are right now. This wick that you see, that means it hit those prices during the day. That means it dropped down to here, but it got bought up, and that it went up to here, but it got sold off. Okay. Why did I think we were going to drop? Well, first of all, I saw our high, but then I saw a low. We broke this support area. We set a little bit of a lower high. We got this increasing bear volume. Okay, so we saw this selling pressure up here, and then clearly we got some follow through. Now on the hourly time frame, this is what I saw. I saw what appeared to me to be a bearish head and shoulders. So a bearish head and shoulders is a type of pattern that suggests downside. And what it looks like is a shoulder. This is the shoulder, a head, and the other shoulder. That's why it's called bearish head and shoulders. And it appeared to me to be that type of pattern. So I entered my short position around here, and I would say this would be my stop out area. If it breaks above here, that's my signal that the pattern is being negated. It's not going to follow through, and let me take my loss. But it did follow through, and as you can see, it followed through in a big way, and we saw a big drop. And if you look on the hourly time frame as well, we saw lower highs and lower lows. So we saw our high, our low, a little bit of a lower high, lower low, lower high, lower low, another lower high. Take that by pennies. Okay? And another lower low, and another lower high, and another lower low, and another lower high, and now we got a higher low. So setting this higher low suggests that the trend may be changing. And now the bulls are trying to get a higher high. We haven't broke this lower high yet, but it looks very plausible at this point. So the bulls are trying to change the trend on the hourly time frame. And when the trend changes, that suggests that there may be some more short-term upside. Okay, another thing I look at is the RSI, and the RSI is this down here. Where see it went all the way down there, that means it was oversold. When it gets too high up here in red, that means it's overbought. Okay, and typically when it gets too extended either way, it tends to cool off, as you can see. Another thing I look at is the volume. And as you can see, the volume was pretty normal, but it started to pick up a little bit more here. But then today, this morning, there was a big volume spike. And what this suggests is that a lot of people panic sold this morning. And what happens is when a lot of people panic sell, the market tends to flip. And that's because I guess the market makers, which are computers that basically run all of this stuff behind the scenes, and people that are trading and whatnot, they say, okay, a lot of people who were going to panic sell sold. They took their losses. So a lot of the people that were going to sell sold. So now there's not as much selling pressure. So now it'll be easier for it to move up because a lot of people already sold and took their losses. Okay, and a lot of people who were going to short and bet against it did already. So there's less selling pressure, and then there becomes more buying pressure because then there's people looking to buy the dip, and there's also people who bet against it that are looking to take profits. And when you short a stock, you essentially borrow a stock that you don't own, you sell it, but you have to buy it back. So when you buy it back, you put upwards pressure on the stock. And as you can see, the bears, they're fighting. They don't want this level to break. They're trying to keep it below that level. They want to keep us in a downtrend. Okay? So it's a battle right now. And it actually is, because there's people that profit when the stock market drops. I play both sides. Whatever the charts tell me, I go that way. If the charts tell me we're going to drop, then I'll buy an inverse ETF and try to profit on the downside. And if the charts tell me we're going to go up, then of course I'm trying to buy stocks so I can make money. Okay? Now we look on the daily, and I don't have all my moving averages and stuff on here, but these lines that you see, these are moving averages. The red one is the 4-day, the blue one is the 8-day, the green one is the 20 exponential moving average, and the purple one is the 50-day moving average. Okay, so these are some. I also look at the 100-day, the 200-day, and a few other ones as well, but these are the main ones that I keep my eye on. And as you can see, we opened below the 50-day moving average, this purple line, today. We moved up above it, but we rejected, we sold off, and now we're hovering right below it. The bears want us to stay below this 50-day moving average because it's a critical support area that when stocks stay above this level, it typically suggests they're in a bull trend. and they're still in an uptrend. And if you look back, for the vast majority of the part, we held this level all the way back since April. Now we did break below it slightly in September. Okay, I think this was September and November. We broke below it, but there wasn't any follow through. And as you can see back here, we had a bit of this double bottom on the daily, and we hit this lower high, but then we set a higher low and we changed the trend. And so now obviously we're back at this part where the bears want to keep us below this 50-day moving average. And if so, we might see a grind around here for a while and then do a further drop. If not, if they're not successful, typically the next level I would look at for at least a rebound is the 4-day moving average. I find that almost every single day a stock touches its 4-day moving average. Not every day, but almost every day. If you look back, the candlesticks touch the red line almost every day. So I tend to use that as a support or a resistance point that I look at when trading, when day trading. Okay? There's other things to look at, such as the weekly time frame, which obviously we've been very bullish since March. We've been bullish in general. In general, the stock market goes up. I think we're getting a little extreme to the upside over here, and I think that's part of the concern. And it's just done this accelerated move to the upside, which is a little bit unusual. Okay? And now I think where we see a little bit of concern here is that we're getting 2 red weeks in a row, which we haven't had in a while, since back in November. And we're going to be seeing increasing bear volume. So that's also a red flag. Okay? And thus far, overall, it's not taking that much volume to make us drop, which means there's not a significant amount of buyers on the downside as of yet. Okay, and this is the monthly. The monthly I'm looking at, we see this indecision candlestick last month. We see that we're significantly overbought, and we're seeing this big upper wick of profit taking up here as well. Okay, so we do got a little bit of red flags. It doesn't mean the market's going to crash. It doesn't mean we're going to be going on a downtrend for sure. All I'm saying is there is some red flags to keep in mind. Okay, but overall, obviously the overall trend is up. But if you look back in the years, and this we did pretty smooth down here, but overall the stock market is not it doesn't just go up. There's these ups and downs that you need to withstand. Okay, and these are minimal overall, mind you. I don't think this platform lets me go back before 2010. Okay, but the Nasdaq peaked. This is the 3-month time frame, which really looks overextended over here. The Nasdaq peaked in, I think it was 2001, and it dropped over 80% to the lows, and it took around 13 years to recover from that peak. Okay, so the stock market doesn't just go up. It goes up and it goes down. And overall, in the long term, it goes up. So if you are able to withstand the ups and downs, which a lot of people aren't, it's not easy to stomach watching your stocks plummet, watching your money in your bank account go down and your money just vanish. It's not easy to stomach that. I can't, personally. I can't do it. So that's part of why I buy and sell on a regular basis, because I want to see my account just go up. And as you can see, look, the bears, they're making an attempt. Look at the price. Okay, 319.60 or so is the resistance. And the bears are making an attempt. They don't want it to pass that, so they're pushing it down over here. Okay, as you can see right here, here's the resistance, and so far we're topping out at 319.30. And we're pulling back. Okay, the bears are really trying to defend that level right now. So As you can see, it's a little bit like a game and like a battle taking place on the market. Okay. So those are a few things that I look at. On this side, you can see a lot of the stocks on my watch list. And this is just in general, a lot of the stocks that are on the TSX. These are Canadian stocks. And on the US market. As you can see, overall, it's a big red day. There's a lot of red across the board. There's a few stocks that are green, but not too many. EAT reported earnings today. They're getting a little bit of green over there. You know, banks are up today. So I found a little bit more blue chips. They're doing a little bit better today. Bell Canada, it's not up much, but it's up. Okay, BMO, Enbridge. So these dividend, more blue chip stocks, they're faring a bit better today. Okay, than high growth technology, unprofitable stocks. Okay, and I just want to be honest, I have a bias, okay, and it's my bias that the market is in a massive bubble, that it's extremely overpriced, and that it needs to come down. That is my bias. So I don't want to influence people too much. And that's why I delete posts and stuff sometimes on my Instagram, is because I'm worried to influence people to sell or to do whatever I do and whatnot. I have a certain way of operating that is not right for everybody, because not everybody can be buying and selling throughout the day because they're working. Okay, and you can't be trading while you're working. I tried it. Okay, it's very distracting, it's very hard, and you can mess up in your job as well as you can mess up trading as well. Okay, so I don't really recommend working and trading at the same time. Okay, but I have a bias that the market is overvalued and in a bubble. Okay, and it's not just that I grabbed this out of the air, that I think that for no reason. I have this bias because based on historical stock valuation metrics, stocks are priced very high. You have a lot of stocks that just don't make sense to me. There's a lot of these car companies, they're worth more than Ford, more than GM, and they've barely sold any cars whatsoever. How does that make sense? How does it make sense that one car company, Tesla, is worth almost as much as all the car companies in the world combined, yet they sell less than 1% of vehicles? And they make significantly less profit. In fact, they're barely making any profits, and they wouldn't have made any profits last year if it wasn't for green company credits. Okay, that they were paid out for being a green company, which they won't always get because other companies are becoming green. Okay, let's not talk about that stock anymore, but there's a lot of these stocks out here that don't make sense to me. Snow, this company is worth, I think it's around $80 billion, and they made less than $1 billion in revenue last year, and that's in revenue, not in profits. Their profits are even a lot less. How can a company be worth $100 billion and only pull in less than $1 billion in revenue? That's like me having a business that I value at $100,000 and I only pull in $1,000 in revenue per year, and that's not even in profits, that's in revenues. In fact, I'm losing money. That's the equivalent to this company, as far as I would understand. So how does that make sense? How does it make sense that Peloton, okay, what's it valued at now? You can look at the analytics, $41 billion US, and that's probably as of yesterday. So how can a Peloton, which makes ellipticals, be worth $41 billion US? It seems ridiculous to me. Like, I get it. It's a cool company. They're doing something that is kind of revolutionary, but they make ellipticals. It's worth $41 billion. They don't make enough money to justify being worth that much. A lot of these stocks, they appear to be priced on hype and on a cool factor. Okay, Uber's losing all kinds of money. Uber's been losing money for years. I get it. Uber's cool. People want to own Uber stock, and that's why it is where it is. Uber's worth over $100 billion, and yet they're losing money. They've yet to pull a profit. They are taking on more and more debt. How can a company that is yet to pull a profit, and that's taking on all kinds of debt, that their competition is going up, be worth over $100 billion US? It doesn't make sense to me, and that's why I think this market's in a bubble. I'm not saying it is for sure. I think it is. There's a lot of guys out there that think otherwise. There's a lot of guys that think we're not in a bubble and we're going to go a lot higher. And it's obviously, look, it's very possible that we do go a lot higher because interest rates are the lowest they've ever been. And who knows, maybe they'll make interest rates negative at some point. I don't know how that's going to work, because who's going to want to own debt that doesn't pay any interest, or that in fact you have to pay the person to take your money? It doesn't make sense to me. I don't know how that's going to work, but apparently they do have negative interest rates in some countries and in Europe. So I don't know, but it is possible the market goes a lot higher. But right now, there's so much of a frenzy in the market that I think it concerns me. And that's why I'm not an investor because at these prices, because I don't see a lot of value. I see, in my opinion, that we're in a bubble. So that's my bias. I don't want to get into it anymore, but that's my bias. I very well could be wrong. And there's guys on both ends of the table that are very experienced, that have differing opinions. Some guys think we're in a massive bubble. Some guys say we're not. Nobody really knows for sure. Okay? But as far as I see, based on a lot of historical stock valuation metrics, we are in a large bubble. And it could be the reason why Warren Buffett is sitting on over $140 billion in cash, his company, Berkshire Hathaway. Okay, he's an investor and he's sitting on cash. Why would he be sitting on cash? It's because he can't find good value out there. Okay, that's my opinion, but that doesn't matter. So let's go back to the charts, because the charts are what matter. Okay, at the end of the day, I will buy a stock, even if I think it's a bubble, just because the charts tell me to. Okay, Tesla this morning, I should have bought it. I thought it would rebound. It got oversold. It went too low. Look, it bounced right off of this support area down here. And we saw a significant buying the dip opportunity where you could have just bought here and sold up here and made some good profits. And oftentimes I do that. I've been taking a little bit of a break lately, but this is how I usually profit. And most of these moves, if you check, they happen in the first hour of the day. All the opportunity was in this first hour. Look, between 9:30 a.m. and 11 a.m. That's where all the opportunity was. The rest of the day, this is very hard to trade the rest of the day. You know, this kind of action, there's not that much opportunity. It tends to pick up again during the last hour from 3 p.m. to 4 p.m. But overall, the vast majority of the action is that first hour, hour and a half of the day. And that's when you can make a lot of money. You could have shorted here. You could have covered your short, bought it here, made profit on the upside, cashed out. You're done for the day. And in the first hour of the day, if you're trading with a smaller account of, let's say, $5,000, you could have made about $300 off of this move. Off of a $5,000 account, you make $300-400, you cash out, you're done for the day. That's how I operate, but I operate on, obviously, I play with a lot more money. So if I did play this and I capitalized off of this move, even if I capitalized off of half of it with $500,000, I could have made $25,000 or so right there, and just off of half of it. So that's what I do, and that's how I make money. I think Tesla's a massive bubble, but it wouldn't stop me. If I was trying to play this morning, it wouldn't have stopped me from buying it this morning and selling for a quick rebound, even though I think it's in a bubble. Okay? Now, typically, Tesla's already in a downtrend, as you can see. We got a high, low, lower high. Okay? We got a higher low, but a lower high here, and then and with the bulls trying to defend this support. Once the support broke right over here, that was kind of the signal, okay, time to get out. It broke below the 50-day moving average, and then we seen some significant downside follow through. Now we're a little bit overextended to the downside, so we may very well see a bounce, maybe all the way back up to the 50-day moving average. We might see a bounce, and then from there we're going to look for, okay, are we going to set a higher low and then start going up again, or are we going to set a the lower high here and then go straight down and set a lower low and continue the downtrend? Okay, so these are some of the things you look for. And looking at this pattern on Tesla here, we saw it was like a triangle. You could draw a big triangle over here, and as soon as it broke out of the triangle, look at the upside. It was 100% move. So seeing this big pattern, it was stuck in this pattern for months, and as soon as it broke out, that was the signal to buy, and it did 100% move. You could have doubled your money, cash out. I find sometimes significant patterns like this, they tend to signal a double is coming. Okay, a double up. Okay, so those are a few of the things I look for. You can see my watch list here. These are the indexes. Okay, this is the TSX, Dow Jones, TSX Venture, S&P 500, NASDAQ Composite, and the VIX is the fear index. Okay, I explained that in one of my posts on my Instagram. Okay, I don't think I'm going to teach you guys any more today. I don't want to give you guys all of my secrets, because I have a lot of secrets on some of the things that I look for when trading. Okay, but I'm not going to tell you all of it. I don't want everybody to know everything I know. See, the fortunate and unfortunate thing is that, and I want to help you guys out, but you do need losers in the stock market, because if to make money on Tesla, you needed somebody to buy up here, right? You needed somebody to be buying up here to sell to. So there's a lot of losers that bought up here that are in the red, that are bag holding. Okay, so unfortunately, you need a lot of people losing in order for other people to make money. Okay, so not everybody can win in stocks. It's just, it can't happen. Somebody has to lose money. Okay, so now look at this TGS, it followed through. I don't know if I had an alert on this, right? It followed through, but then we did a big pullback and there was a big upper wick of profit taking. You see this volume spike. So now a lot of people that already bought up here, they're bag holding. So that's going to provide resistance on the way back up. Anyways, I think I'm done with this video for today. Perhaps I'll make more videos soon. Hope you enjoyed. Half an hour video, that's a long video. I think that's long enough. Thanks for watching. Have a nice day.